Welcome into the Crypto Bunker podcast. Let's take a look at the prices across the board as we get into some crypto news and developments. And then we will take a look at the charts focusing on Bitcoin and Ethereum. So looking at the prices, obviously we're down about 11% over the past week in Bitcoin, Ethereum, and Polkadot, which I think is interesting actually just to see that those three are down the exact same amount. They're sort of trading in tandem in that way. Those are personally the three coins that I like the best. None of this is financial advice. Those are the ones that I'm accumulating for the long term. And so we see Polygon is down a lot, down over 16% on the week. So Polygon, I think the correction was inevitable. And so, that's kind of what we're looking at. We're looking at there. So yeah, let's just jump right into the news. We see that the Texas legislature has passed a law that basically helps Bitcoin miners to help help with basically greening the planet, if you want to say that, or reducing carbon footprint. So let's take a listen to what this means for Bitcoin and Bitcoin mining.
We are thrilled to announce that the Texas House and Senate have just passed our flare gas mitigation bill, House Bill 591. This bill will soon go to Governor Abbott's desk for signature. House Bill 591 is a bill that clarifies that oil and gas operators can sell formerly flared or vented gas for on-site consumption for mobile data centers. Oftentimes, these mobile data centers will be Bitcoin miners powered by natural gas generators. There's a 63% carbon impact reduction when gas is redirected in this way. It's a great example of industries coming together to create economic activity, jobs, and tax revenue, while at the same time mitigating carbon emissions. We want to recognize and thank Representative Giovanni Capriglione, the House author, Senator Cesar Blanco, the Senate author, Spencer Schumacher, the Executive Director of the Innovation and Technology Caucus of the Texas Legislature, and TBC members who spent countless hours researching and testifying on this bill. Members like Brent Whitehead, Griffin Habey, Brandon Martin, and many others. Thank you all for your efforts.
So yeah, really cool stuff. Just showing again that Bitcoin is helping to reduce carbon emissions in a lot of cases, and that the media narrative is not right in this case. So really cool to see that, and curious to see what comes out of it. Public companies potentially continuing. I mean, I think that we've tested it out in terms of companies that are using Bitcoin in this way, Bitcoin mining. So yeah, really cool to see. So the next thing is BRC20 tokens surpass 1 billion market cap as wallet providers prepare integration. BRC20 tokens are Bitcoin tokens similar to ERC20 tokens, such as Chainlink, Uniswap, etc., that are on Ethereum. So this comes just 2 months after the creation of the Bitcoin token fungibility protocol. So we obviously know that ordinals have been happening, which is like NFTs that are inscripted on token contracts. So we're now seeing tokens that are coming online as well. It's a cool experiment, and I think that it actually really helps Bitcoin, because although we see the transaction fees are higher, that's okay. It's not that crazy. Transaction fees are fine as long as the transactions are processing, which there has been a little bit of issue with. But we do want the transaction fees to go up a lot over time, to basically secure the network and make sure that the miners are getting paid enough to keep their miners online, which will again enhance the security across the protocol for a longer term vision, which some people had in question. But again, this is helping to create a higher transaction fee, which is good. So another thing I wanted to go over is the Polkadot Chief Legal Officer, CLO, was in Congress the other day, working with the U.S. House Committee on Financial Services, explaining that DOT is not a security, that it's a software. So I think it's kind of just getting Polkadot in front of more people, in front of Congress, to explain that in terms of regulatory wise, Polkadot is actually in the lead in terms of what exactly it is. They've been working with the SEC. They've been doing a lot. So let's take a listen to what he explains at the beginning of his take here. Let's see if I can get this up. So I apologize. The the link actually moved forward on me a little bit here, so we'll get it. We'll get it right here, though. Here we go.
As regulatory approach, a token is forced to fit into limited categories. However, it is not always clear. Hill, Chairman Johnson, Ranking Member Waters, Ranking Member Scott, Ranking Member Lynch, Ranking Member Caraveo, and other members of the committees, on behalf of the Web3 Foundation and the Polkadot ecosystem, I would like to thank you for the opportunity to testify today regarding blockchain technology and the benefits of Web3. I am Daniel Schönberger, the Chief Legal Officer at the Web3 Foundation, and I've worked at the intersection of emerging technologies, law, ethics, and public policy for more than 20 years. The Web3 Foundation was formed with the goal of establishing Web3, a new and better internet infrastructure. It wasn't about building a currency like Bitcoin or a smart contract platform like Ethereum. It was about giving siloed blockchains the ability to communicate with each other, and to realize this vision, the Polkadot network was built. Now think of Polkadot as the SMTP protocol of the internet used to send and receive email, and think of layer 1 blockchains such as Bitcoin or Ethereum as email providers like Yahoo or Google. Polkadot allows these distinct programs to communicate with a seamless connection and interoperability. Without this infrastructure, this would not be possible. The native token of the Polkadot network is a blockchain-based token known as DOT, D-O-T that is. It should be thought of as the orchestrating tool used to secure and govern Polkadot. To facilitate the creation of this ecosystem, a future DOT token was sold in private sales from 2017 to 2019. The foundation treated DOT as a security in accordance with Regulation S&D, and the foundation confirmed the identity of the original buyers through KYC and AML checks. After 3 years of engagement with SEC staff, the foundation believes DOT is no longer security based on the Howey test. DOT also satisfies the factors indicating a token is less likely to be a security as set out in the framework for investment contract analysis of digital assets, as it was issued by the SEC Strategic Hub for Innovation in Financial Technology, FinHub. Given DOT's functionalities and properties, the foundation thinks of DOT as merely coordinating software. The foundation suggests putting DOT in a separate category, for example, a class of utility tokens. The most important regulatory concern for the foundation is the classification of tokens. Both Switzerland and the European Union have created a clear framework distinguishing between payment tokens, security tokens, and utility tokens. Under the current US regulatory approach, a token is forced to fit into limited categories. However, it is not always clear in which category a token should be placed. As a simple example, the chair I'm sitting in could be tokenized. Also, there will be some tokens that will have the characteristics of a particular asset class, and at a time in the future will cease to have those characteristics. This is part of the nature and innovation of blockchain technology. Clearly, a legislative process to re-evaluate a token is necessary. The SEC staff has already outlined a path to evaluate the status of a digital token. The foundation suggests that Congress establish a procedure through legislation to authorize regulators to re-evaluate the status of tokens. And let me be very clear, if a token is used for fundraising purposes, it should be subject to all applicable laws and regulations. However, that same token may serve a functional purpose, devoid of speculative investment in the future. We fully support putting into place a legally binding process of token reclassification. And we applaud the subcommittees for undertaking the hard work and deliberation necessary to develop a legislative framework. We would ask you do so with the understanding and approach that recognizes new technologies. To simply apply existing regulation would be inadequate to truly address this emerging technology.
So again, this is good to see. Polkadot and the CLO from Polkadot Web3 Foundation in front of Congress, just explaining, why Polkadot is more of like a utility token. Hopefully, they can eventually get this right. I am more optimistic than I was maybe a month or two ago, just because I think everyone sort of sees that Gary Gensler is a joke at this point, because he just continues to not give an explanation for anything and not really give a way for people to register as a security. So at this point, Congress is stepping in and at least learning and trying to hear from people who are in the industry. So there wasn't a Ethereum temporarily stops finalizing contract or transactions, which is a pretty big deal. And this does happen on other chains a lot. It usually does not happen on Ethereum. So, but it did occur. And so it's just basically we want, basically it's good that the clients, the nodes that were running the network were not, um, totally centralized like some other places like Solana or Avalanche or whatever it might be. So yeah, Ethereum being more decentralized actually helped this, which is definitely good to see. So in terms of the U.S. Chamber of Commerce, just going back real quick to Gary Gensler, but you we can kind of read as it stands today. Nobody knows for certain which digital assets, if any, are securities under federal law. That is no small question. It has immense implications for every person involved in the $1 trillion digital asset economy. And it is the threshold regulatory question from which all others flow. But remarkably, the Securities and Exchange Commission, despite proclaiming itself the primary regulator of digital assets, has refused to resolve this threshold question. So again, you can read more about this from at @gnovak_ on Twitter, Graham Novak, if you want to see everything that's written there. But it's just saying that, again, like if the Chamber of Commerce is saying how bad of a job that Gary Gensler is doing, then maybe we are, in a little bit of a better place right now. So I think that's a good thing for sure. So yeah, also potentially wanted to just play this last 4 minutes. This was, I think Fidelity is a big deal in this industry. They are really, really, um, you know, making strides to have Bitcoin available in retirement accounts. They now have Bitcoin and Ethereum trading on their platform, which to me just shows that those are more in a regulatory um certainty framework than other coins. So that's why like I like Bitcoin, Ethereum, and Polkadot, because to me they seem like the most you know at least closest to being okay to for regulatory reasons. So let's see what they say about crypto. That this is just one clip. I do recommend watching the whole thing, but yeah, we'll see.
Minds, not everyone, but those are the things that I would say are hugely important.
And Dave, what about you? What kind of advice if someone's sitting here saying, I wish my employer would allow me to invest my retirement assets into Bitcoin, what is the journey they should go through?
Yeah, well, I would say always, whether it's for that or just applying it more broadly within your corporation, my advice is always start with the customer in mind. And I think as long as we keep focused on the customer, and particularly the next generation of customers, the next generation of workers, what is it that they know natively? So I want you to think about something, and I remember I was not born digitally native. Like I can remember Web 1.0, right? Right, and it was just like you had to wait for this thing to then you can just see some information. Do you remember Web 2.0? Well, Web 2.0 was wow, you could actually transact. Well, a lot of people thought there's no way people will do commerce on the web. It's good for getting information, but who would do that, right? And what they missed was that the customer mindset was shifting and they were left behind. And I would say think about your company, think about your benefits program, think about your customers. Make sure that you don't miss that next wave of innovation. A Web 3.0 world, which don't just think of that as Mark Zuckerberg and the metaverse, but think about that in more of a peer-to-peer environment. This is where Lightning Network comes into play, right? Think about that in terms of large language models and AI and ChatGPT and blockchain technologies that'll sit behind all of that. think about those customers and make sure that you are moving toward the future. Most everything you know about your benefit program today, and I guess I'll close on the benefit program. Most everything you know about your benefit program today and you feel is normative. Not that long ago, you could have sat in a conference like this and heard somebody tell you it was risky. Right? But yet, we all view it as norm. Financial services have changed. There was a time when people could call on the phone to make a trade, read the articles in the 1970s. That was the worst thing possible for investors. Investors should only get access to the markets through their broker, sitting across the desk, right? In the 401k business, there was a mindset that participants should never have access to the.
So, it's just cool to hear from Fidelity. Again, I'll try to link this in the description of the video. But, just in terms of them speaking about the future, to me, it just felt good about them talking about future generations and how everything's going to be on the blockchain. And like, they already know that. I mean, this is a company that manages, $12 trillion of assets or have at least that much on their platform. And they're already recognizing that they need to tokenize. And I tried to find the clip on that, but they actually talk about how they need to tokenize, or they think that everything will be tokenized, basically. So, in my opinion, that will happen on more decentralized networks. I think there will be companies who work to try to tokenize things, like JP Morgan, Microsoft, Goldman Sachs are already creating blockchains. There's many companies that are creating blockchains behind the scenes themselves. But to me, that just shows that, to me, that is actually going to be really bullish for Ethereum and Bitcoin. I don't think we're going to live in a world where it's just mainstream companies who are, basically dominating over us that much without a decentralized option. So let's take a look at Ethereum. I just wanted to show real quick the NASDAQ 2000 bubble crash basically paired over the Ethereum chart. And to me, it looks very similar, even with the top and the bottom is almost exactly the same. Obviously, this is the difference here. It more just went straight down, but it did have like rallies in between, just like this one. So it is very, very interesting to see. And actually, it might even match up better if I put it on a monthly chart. I'm not sure. Yeah, it probably does, because you can just see it sort of, yeah, even if I expanded it out a little bit and everything, like, I think that this is very similar. So, we're right on line with it. I wonder if, yeah, I actually think, to be honest, that this makes sense. Like a crash that happens next year. This would be just around the time that happened in 2020, 4 years later, which is kind of the cycle that happens in crypto, which is like the 4-year cycle. So, and then maybe that's a setup for the Bitcoin halving that's happening around that time, kind of a sell the news event that takes us into a bigger rally that actually just goes and just doesn't correct all the way up until, December or even January 2028. And it's funny that matches up exactly with the, the fib retracement basically of this, would be around that level of the 3618. It's just, to me, it's very interesting to look at it. Even if, like, let's say we did this and we say, okay, that was the bottom, and then we have this is like the retest of this, which I think is actually perfect. And then again, what does that lead us to? Right up into these top levels of fib, which is kind of exactly what we saw happen in this scenario as well. If we go down here, we went exactly to the 3618 basically. So I think that those targets really do match up well, and that's kind of what I'm looking for potentially to happen. So if we just follow that out, we'll see what happens. But I'm not going to get into the markets right now. I do think that we're due for a pretty big crash in the markets. We obviously see gold and silver selling off, but right now I'm going to focus on crypto, and let's focus on Bitcoin here, where we're going right into the 200-week moving average. I think that we can catch support around these ranges. We have 3 weekly averages below us right now. So I'm looking to catch support within these ranges from the 200 to the 20 week, hopefully. If we do catch support in there, I do think we're looking at a sort of a bull market scenario that's already playing out. If we go through these, I could see us even testing the lows down here. So we'll definitely have to monitor that and kind of see what happens. But you can see that if you kind of take that as a trend line, which I have used in the past, we kind of ran right into it a little bit there. And so, maybe you look at it in terms of a bull flag. I mean, you can look at it in a long-term frame, sort of a bull flag scenario where you have like the flag like that, and then you come through and then you go up and you try to target 300K in the next bull potentially. So I'm not sure if that matches up with fibs exactly, but we can see that if sort of does. Yeah, up in this 200K range would be cool. So again, I think crypto is inevitable. It's just a matter of timing. And this is the Polkadot chart also up against the Amazon chart. And I do believe that these are exactly the same. I have talked about it before. I tried to match it up. It doesn't match up perfectly, but this is kind of where I think we are. See how that chopped around in that range. And then I do see us kind of coming down to maybe potentially this all-time low, but I know that sounds crazy. So we'll see. I mean, it might have already happened. It may be more like this. It may be like just chop and then sort of just go up from there. But either way, you can see kind of what happened with Amazon. Obviously, it could take a long time, I think, for this to play out. I think Polkadot, maybe it doesn't hit all-time highs again until 2027, 2028, and then a big crash, and it just keeps going because blockchain is just used in the future so much, which I believe that it's actually possible to hit $1,000 dot. Not financial advice, but this is the time you want to be accumulating these type of assets, regardless of if it goes down another 50%. It's not going to matter when you're looking at like a 20-year time frame. So hopefully you guys got something out of the video today. If you did, please please subscribe, and have a great rest of your day.